Hi there, traders, and welcome to Trade the Structure. Now, I'm going to show you some trading from today. It was on the Nikkei Index, okay, so the CFD on the Nikkei Index. I'm trading it through TD365. So you've got the charts on the screen here. What I'll show you is the 5 minute, and I'll show you the 1 minute. And I'm going to show you what I think is one of the most important things with trading, okay? And I think a lot of people underestimate, trading traps is what I'm talking about. So that's what I'm going to show you. I'm going to show you a perfect one that's set up for today. Okay, so it's one of those things that if you're intraday trading, especially, you have to be wary of what could happen. Okay, so you have to be prepared. It's not only planning the trade ahead. Okay, it's reassessing the price action as you get a bit more information. It's reassessing. So you'll see once we scroll down to the 1 minute chart, I'll show you. Some trades that I did earlier on, I was short, I was long, I was short again before I actually got onto the right side of the action and then went short and got some really good payout. But it was about that time where I did notice that, look, things not going quite to plan. I'm not sure what's going on, but I'd rather cut it. So I'll go through the trades and I'll show you especially what the actual trap was. Okay, to get started, what I've got right on the screen here is the underlying index. It's a 5 minute chart of the underlying index. So that goes from, I think, 10 a.m. Sydney time to around 4 p.m. Sydney time, the same as the ASX 200 on the Nikkei. All right, so what I was looking at, you've got this little gap up on the open. All right, so what you can see is the market is coming to a resistance zone or a previous high. All right, and then it started to fail. Okay, so I was looking at this action when I was trading it. And I was looking at especially, I was chopping around here. So at that stage, what you're doing is you just come into a level, it's been rejected. Okay, that's fine. I did actually go, I think I went short in here, got stopped out, and then went long, made some money back, and then went short, got, chopped out again, and then actually ended up going short for a third time and got this sort of run down here. But what you can see is that the market was sitting on top of the MA. So you've got a scenario on the underlying index where the bias is up and it was into resistance and it potentially could fade off that level. Doesn't mean it's going to, but potentially it could fade. So at that stage, it was a bit of an each way bet. It could have gone straight back up again and taken off like it did eventually, or it could have just rollen over, which it did for a while. Okay, so bear that in mind, what we're actually looking at here, because when you look at the underlying CFD, the MAs are actually down. So you've got this mixed bag of the underlying index, the EMAs are up, so it's biased up. On the CFD, it was actually biased down on the 5 minute chart, okay? And what we're looking at is to trade off the 1 minute. Okay, so let's get across to the CFD pricing now. So you can see what happened. The market, this is the start of the session. It's around about here. The market popped up at 9:45. I just marked that up there. Whoops, about there. That first green candle. Then we started to rotate down. Okay, so we're off a resistance zone somewhere about up here. It was starting to fade off these previous highs. We're starting to get this lower high come into play, and then it started to power down. Okay, so I was trading in here, which I'll show you again on the 1 minute chart. I think I've got them still marked up, and then eventually got onto a short. Actually, I didn't trade in here. It was just in here. So I sort of went long in here, went short, went long and short again. So I did a couple of trades, a couple of wins, a couple of small wins, a couple of minor losses before I got onto this good one, which powered down. I took some off here and then ended up taking some a bit later off when it didn't, we got this flush. I think it started to bounce here. So I took the other half off. Okay. And that was, I didn't actually see this run up. I basically turned it off, closed it down. A few minutes later, it took off. Okay. So you can see that the market, it was looking, to me, it was biased down. So remember, I just talked about the underlying index, which was actually biased up. At the same stage, this was starting to show bias down. So on the CFD, you're trading, it was a prime entry set up to go short. All right. So as you can see, the market, I've got the 20 and the 50 EMA. I've got my MACDs, pointing down, momentum's down. We've got the markets pressed below the EMAs. It's come back. It's your first pullback on the 5 minute chart. Everything's looking great for a short. Okay. It started to go down. But what we've got to recognize, once we've got a bit more information and I started to see the market go sideways, in my mind, if it's going to go down, we're going to go from a potential offer zone to a bid zone. All right. And what it did do, it actually did go straight into that area there, it bounced, and I thought it would actually go straight down because I think on the index at that time, there was a bigger bid zone or support area where I thought the market was going to go into, and it didn't. It started to bounce around here. So what you can see is once you've got a bit more information, okay, you've got to be wary that you're not getting too biased one way because you've got a good win on the board. Okay, it was about 70. I think I took off 70 points here, and then later on it was probably a bit less than that, probably somewhere around the 50 mark. Okay, so it was a good handy win. I might have been going for 100, 120, and because I've had a couple of losses before, I might have been trying to cover that plus get a hell of a lot more. Okay, and just trying to kick a big goal, I guess is what I'm trying to say. Go for that big win. But what you can see is once you start to get a bit of information, bit more information, you've got to keep reassessing that. Okay, you can see that momentum's down. It's looking like it's getting a bit extended. I think for me, the key part was, if I just marked it up, the key part was this rejection here. Okay, so you took out the lows, which you can see through there. You took out this sort of spike low, you took it out and bounced straight back on that 5-minute chart. And once we started to bounce there, so as soon as we bounced back, I was looking at the 1-minute chart, I closed it out. It didn't look too crash hot. I thought once that candle finishes, I'm probably going to get out and try to pack away as much gains as I can. Right, and we got the market actually did start to spike up a bit later on in the next candle. Right, so you can see that yeah, once you get that flush, it takes out the low. What that's doing is getting some more sellers into the action, because it's quite clear. People are looking this, it's quite clear price action to the downside. Just because it's clear does not mean it's going to go down. And that's what I'm saying about, once you get more information stacked up, you can start to see a bit more information. You've got a bit better read on the action. You've got to assess it as you go. You can't just plan out, and that's where I'm going from. I was selling it here. I'm going down, I'm potentially going to a support zone down here, and that's it. I'm going to walk away and leave it, because what you're saying is if the market, you shorted in here and it come flying down, your stops above that, you walk away, you turn around, give him back, say 70 or 80 points to taking a 40 or 50 point stop loss. Okay, a turnaround hot. So that's 120, 130 point turnaround from that low to the high to getting stopped out. So you can't just walk away and leave it, especially if you're intraday trading. Okay, if you're on a daily basis, you've got more time to do different things, come back and reassess it each day. It's a longer term trade, but when you're intraday trading it on such a fast time frame, and especially when I'm trading off the one, you've got to reassess it as you go. And I've got a bit more information here, especially when you've got that spike down, that rejection. To me, that's okay. It should have gone down. Why didn't it? Because there was obviously enough sellers below that. People were taking that breakout trade below this low, below the support. It took out that low, took out this low, and then retrace straight back above. That's not a good sign. That to me is a pure flush. Okay, it's a flush of a level, and generally after you get that sort of a flush, you start to get this bounce back, and that's exactly what happened. And if you're looking at that thinking, I think I was assessing it this way. Okay, so I've got this support zone through here. All right. So to me, that's fair play. We've broken that. We should have kept going down. We've pushed into this level. We bounced back off. We consolidated just above. We should have gone down. So as soon as we've got this rising support, okay, in your favor, you've broken through that. We've got a lower high coming into play. I sold that. I sold a little bit early off this lower high. Come in, I made some money, and I was looking for that bigger move down, potentially, like I said, right into this sort of support zone here, which is pretty much what I drew before. Okay, looking to that. Now, as soon as we got that rejection, I've got to reassess everything, my theory. And what I did was basically scroll it back. And if you start to take it from this low, for instance, you can start to see that, look, that picture was looking a bit less bearish. Okay, we've broken one support zone. We've broken this support, so you get a bit of confidence. And once it starts to bounce back, that to me is, yeah, okay, it's a flush, but it's more of that trap we've been talking about. Okay, I've spoken about it in previous videos. You've got the trap that's set, and you can see pretty much what happened after that is it went straight up. So look, there's two things. If you don't run a stop loss, and you happen to, you go into the toilet, you get in the coffee, and you come back, and then you've got a handy little 50 to 70 point winner on your hands, and it turns around and takes out this, you basically bounce back. If you step away from the computer for too long, you don't run your risk on your trade, then you're looking down the barrel of a massive loss. Okay, so like the heading said, for this actual video, you could turn around. Look, you could have a good winner turn around and just turn into a big loss. Okay, especially if you don't run risk. Now, I always have a hard stop loss, and I do manage it as I go. I might pull down the stop, I might just close it out and then cancel the stop loss. But I do always had a hard limit of where I'm going to be proven wrong. Okay, and that was above there, and I was starting to manage it. Now, the way it flushed down here, I moved my stop loss down to break even on the partial, but I still got out. I didn't just let the market retrace because I'm adding up the price action. Okay, and once we got that rejection, to me, I've seen this many, many times before. I've seen this trap play out many times before. Okay, that price action was looking great for a downtrend. You're looking at this trend support. Okay, people may not have seen this longer term trend support. And we'll just flick over to the 1 minute chart. And when you're trading that 1 minute chart, it looks a lot like that. So you may not have noticed it at all. Okay, because you're looking at this minute detail. You're looking at just that support. And on the 1 minute, okay, it's not so minute. But when you scroll it out and you're looking, like I said, on the 5 minute chart, that price that you may not have noticed it at all, and you're looking for that big, big move down, and it turned around and went straight back up again. So you not only got caught, if you weren't running a stop loss, you've turned a winner into a loser. Okay, whether you're running a stop or not, you're probably more than likely turned a good handy winner into a loser. The way I traded it, like I said, I took this little jam down here. I had a hard partial exit. I like to take a partial. I just whack it in there somewhere around those lows, which happened to be it was around 50, and I got slippage down to 47, I think. Yeah, I was around that 50 mark. I've got it at 47 here, which probably was around about the exact low. I got to 44. So I was lucky to get a really good fill on that first partial exit. And then I got somewhere up here once it started to retrace a bit. Okay. So all in all, look, it was a really good trade. I think you've got to understand when the market's potentially going to trap you. Okay. It doesn't mean it's going to trap you, but you've got to be wary as you start to get a bit more information. Okay. What you expect, is that starting to play out, or is the dynamics changing? Okay. What I expected was it to go down. Okay. Especially here, I was holding through this, it bounced back up. I was holding. We go down. Okay. For me, that's great. We're going to keep going down. But as soon as we bounce straight back, I go, oh, something's not quite right here. I don't know what it is. And then if you start to, you look back again, what you do, I always go back to look at my price action. What am I seeing? What have I missed? Flick it onto the 5. Like I said, what have I missed? Okay, I can start to see, oh, maybe it's this support. And you can see it's just coming into that level there. And remembering that the underlying index, we just get that up, the underlying index was bouncing off this level here. And it hadn't, I would have expected that to break, which it didn't. Okay, it held up there. So it was kind of the same price action, flush down, hold, take out the low and bounce straight back again. Okay, so realistically, those MAs were starting to, they were coming in together, they were contracting, but they hadn't crossed down. Okay, and as soon as they bounce straight back up again, I've got the 20 and the 50 especially that I focus on. I've got the 10 there in yellow, but I've got the 20 and the 50 in blue. They hadn't actually crossed. So as soon as it started to bounce back, you've got to be wary. You've got to really, focus in on the price action. Make sure you understand what's happening. If this happens to you and you happen to get stopped out, above, you might have got stopped right back up here. Okay, if you entered here, you might have kept your stop there. You're looking for this, you run through that, you turn around and hit your stop. So you've turned into a, like I said, a 70 to 100 point winner. Turn around and would have stopped you out for a 40 or 50 point loss. Okay, so what you should be doing, I feel, and what I like to do as well, is mark that up. How could I trade that better? Okay, I look at my 5-minute chart, I look at my 1-minute chart. Is there anything that stands out that I should have noticed? Okay, you've got the 5-minute, and also you've got this, if we can just see this here, you've got this kind of divergence in price. That's another thing. As soon as you got this bounce back, you go, look, I'm getting divergence on the 1-minute chart. We could have a retracement. We may just head a little bit higher. We may go back up here, consolidate, around here, and then go down again. I don't know. So it's up to you how you manage that. But what I was saying on the 5-minute chart, because we flushed and come straight back again, I look at that and go, look, we're going at least up to this high. Okay, at the very least, I think we're going to retest back into this high. I don't really like it. I'll close it out. I'll reassess it. If I want to get short again, maybe I'll have to give up a few points for safety, to manage my risk, give up a few points to re-enter at a slightly lower level, to just manage my risk, like I was saying, and not get stopped out at a wider stop, which would have been up here. I think it's a really good example. Like I was saying, back to the 5-minute chart, really good example of a trap and how to negate or navigate that trap, and how to recognize when potentially you are on the right side, but is it a trap? Isn't it a trap? Isn't it a trap? Okay, is it going to keep going, or is it going to reverse on me? And at this stage, you had rising support here, which, okay, to me, if you're looking at purely this price action here, this price action up, broke through support there. Okay, we'll get a lower high in play. Great. So there would have been a bunch of traders. You got that lower high. They sold short in here with their stop above it, turned around and got stopped straight out. Okay, I was lucky enough to get in a bit earlier. Okay, I'm trying to get in the unknown, not the known. Up here, I ran that down. I was already in profit anyway, and then it reversed on me. I was out for a slightly smaller profit on the second half. Okay, because I'm just managing my risk, and I started to notice this rising support at a slightly lower level. Okay, so it's all about managing risk and recognizing the signs of when you could be caught on the wrong side. Really good example of a trap, and something that you should take notice of. And I think there's got to be a process, not only before you're trading, looking at your trading plan and working through that and getting your prepping your levels set up so you know what you expect to see, what you want to trade and how you want to trade it. It's also about managing your trade when you're in it and managing your risk. It's not about where it's going, it's about where you could be proven wrong. Okay, what could happen? And if you start to really focus in on that when you're in the trade, in the midst of the action, then you can start managing your trades better. There's probably going to be times when, like, I might have stopped that out, I took myself out, it's bounced up and come down and come straight back down again. Maybe that could happen. But I think more often than not, what I saw here on the 5-minute chart, more often than not, that's going to retrace when you've got that sort of flush and you've got this confluence of levels. Okay, so all in all, it was a good day. It could have turned out a bit worse. I could have had I think up until that sell-off there, I was down slightly. So if I took another loss on that, it would have been a losing day. But instead of a losing day, it was a really good winning day. Okay, so yeah, it turned out well. I was happy with it, and it was all through managing my risk there and recognizing the trap that was getting set. All right, guys, that's all I want to say. Thanks very much for joining me, and we'll speak to you again soon.